This time of the year, I'm frequently asked the question, what do I see for the new year coming? And my answer has been more and more, I'm optimistic. I tend to be optimistic because I'm confident that in the longer run, and people always ask what's the longer run, and let's just say over a period of 3 to 5 years, investors are rewarded. That's not always the case, but generally speaking, those people who invest prudently and well do very, very well over periods of time. When you narrow it down and ask anyone, what do they think the market will do today, tomorrow, this quarter, the year, the likelihood of being right or wrong is probably pretty close to 50-50. But the more you lengthen that, that's when the real rewards of investing come through. So this year we begin with, this is a different time. We've never seen anything like this. And for someone like myself who's been in this business since 1969, for every one of those years when things bad happen, it's always, boy, it's different this time. And it always is different this time. But one thing that's been remarkably true is the result is always the same. The market recovers. Long-term investors are rewarded. Those who get too exuberant, too extended, usually get punished. And those who have that long-term view of things do very, very well. You have to remember that even with a decade like the aughts, where returns were actually negative over a 10-year period, the market has quadrupled since then. And the people who weathered that storm and remained invested have done remarkably well. I'll tell you a story about what happened to me, fortunately, what happened to me when I was a very young man. I went into a brokerage office. I was interning in Media, Pennsylvania. I was a graduate student at Wharton, and my internship was in the county government and media. And at lunchtime one day, I wandered out and I visited a brokerage firm, which has since long, it's out of business a long time now. The name of it was by Curran and Company. At any rate, I was shown a mountain chart for a very well-known mutual fund, and it showed $10,000 beginning in the 20s being worth over $1 million, and this would have been 1963. So it stuck with me, and for some reason I absolutely believed that if I were to invest over the long term, I would have success. I'd accumulate financial security, even wealth. And it's kind of a blind faith that did that. Warren Buffett refers to it as benign neglect. And I believe what he means by that is when the normal fluctuations in the market occur, the volatility sets in, that's a good time to have benign neglect. You don't really focus on it. You live through it with full confidence that the sun will shine and investors will be rewarded. Now, if you look at the depths of the financial crisis in 2009, the S&P 500 was about 660 at the time, 666 as a matter of fact. Today, it's almost 4,000. Now, that's why we invest in stocks. We don't invest in stocks to make 10 or 20% in and out. There are people, I think, who may make money doing it that way, but the way to really make and accumulate wealth is over the long term, and it takes 3 very important things. It takes patience, and it seems to me that in our world today, patience is in very short supply. It takes faith and belief in the future, and I find that to be in very short supply too. And the third thing it takes is discipline. And without the discipline, it's difficult to have faith. But with the discipline, I think it's a lot easier to have the faith. And it's those combination of factors that come together that will be rewarding. And so we begin 2021 saying, well, what's in store for the market? My personal belief is that we're still in a major bull market, a cyclical, what we call a secular trend that began in March of 2009. And I wrote a piece back then. I said, get ready for a great bull run. And why did I write that? I wrote it because we had just gone through 10 years of dismal, miserable returns. And there is something called regression to the mean. And when you get regression to the mean, when you're that far below a 10% annualized return, remember it was at zero, you should expect that. Now, we're at the other end of that, and people are saying, well, now maybe the market's run too far. Maybe it's too high. Maybe it is. Maybe it's not. The key ingredient is you buy good companies. You buy companies that can grow their earnings and their revenues with some degree of confidence over time. You don't buy companies that are cyclical, that are going to go down when the economy weakens, and they'll go up when the economy recovers. So in today's market, the companies that are recovering the most are travel and leisure. They were absolutely crucified when the market went down in the early stages of COVID-19. Well, it's true, you can buy them and sell them right, but that's not the key to investing. I think the key to investing is buying something and holding it for the longest possible time. I've been writing a book for some months now, and I keep thinking it will be released soon. Forbes is the publisher, and I hope that it will be released soon. There's still some work to be done on it, but the title of it is A Good Buy is Forever. And to do that, it does take patience and confidence. You have to trust the numbers. That's what we've done. That's the reason why we were ranked number 2 by Lipper for the 10-year period ending September 30th. I expect we'll be ranked as high, if not higher, for the 10 years ending December 31, 2020. We do it with extreme confidence, patience, and we buy quality. And that's what I think is going to happen. The market will go up. I don't know if it goes up a lot. If it goes down and you buy quality, you buy more, and you maintain your patience and your discipline, and it will all come together. Thank you.